Hey guys, how's everybody doing today? Thank you so much for being here. All right, let's check out the market. Anything happening in the market today? It's kind of a quiet day, right? Nothing's going on in Bitcoin, is there? Anyway, yeah, Bitcoin's down 7%. The good thing is, Jackson, get out from under this, please. The good thing is, Bitcoin is taking some of the heat off silver. Or silver's taking some of the heat off Bitcoin, being down 12% or 15% or whatever. But the even better news is, and gold's also kicking in and trying to be disappointing too. Then of course down 2%. We have blocks down 6%. That's actually not bad. Blocks drop 6% some days when the market's up. That's actually pretty good. Blocks. David probably has that hedged. I mean, to the best he can. Let's check ULTY. ULTY down 2%. Pretty average. Let's check ULTI. ULTI down 10. Yeah. No hedges there. Well, let's check. I hate to do this, but let's check mean Y. This one doesn't have hedges. It's down 10. Let's check Mago. Also no hedges. Or it's not really no hedges, lightning spreads. So, nothing like Alti has. No attempt to mitigate the downside. Now that one's only down 1.89, which surprises me. Maybe Matthew did put some. I think Matthew put one of his. Maybe he did hedge that one off. Anyway, let's check BITK. Down 7%. BITC. Well, that's trend line. I don't care about trend line. Well, actually, I do care about that one. That's the one that switches in and out of Bitcoin and treasuries. That's just a total coincidence that I pushed that in right now, but I can never think of that ticker. But I bet that one's coming in pretty dang handy right now. Well, we'll see how well their system's working. They better hope they're in treasuries. I mean, this is one of the worst bear markets I've ever seen. Of course, it's crypto, but I mean, I remember in 2008, I couldn't believe that we dropped more than 50%. When we're down 30%, I was like, there's no way we're going to go down 40. Surely there's no way we're going to go down 50, but we're going to bounce. No, we went past 50% at one point in 2009. I couldn't believe it. Crypto's at 50% right now. It's a 50% retracement because it hit 67. So that's, what is that, 134? It's 50%, right? Didn't it hit 132 or something, 133? 50%. That's amazing. Anyway, all right. These guys, let's see how these guys. Oh, I have on 5-minute charts too. Sorry about that. On the 5-minute charts, it looks worse. I was doing some trading. I got some. I'm sorry it's a little bit late. I got puts this morning. I actually got puts on the close. I rolled them this morning and doubled down. So I'll make the market will go back up, because if the market goes up, my double down loses and my big trade from yesterday disappears. So I took one for the team. If I would have just taken it off, the market would have kept dropping, but I rolled the proceeds into a new one, and the profits, everything. We're going for all or nothing. You only live once, baby, right? YOLO, baby. YOLO. Only 5 of you guys here today. Hopefully people are trading. It's a rough day. I don't blame people. I tried to get on here early because I know because I know you guys are probably stressed. Anyway, hey, most days I add to the stress. Remember yesterday when I freaked out about my blocks hat? Anyway, I was thinking about it this morning. I'm fine. I'm 35% inverse and I add all and inverse and head and tail risk. So I mean I'm prepared, and I sold most of Alti a long time ago. So all right, my only really bad move was buying more blocks, but that I could really take back. Anyway, all right, TSYX and TDAX are great combos. Okay, now all the cool kids are calling TSYX sticks. You know that. Chad, I heard that Chad was giving me a hard time in chat the other night because he kept talking about sticks, and I forgot what it was. But yes, sticks, TSYX and TDAX are great combos. All right, so Coasty, you're a first-time commenter, I believe. Buying the dip in TDAX. Nice job. I know a lot of people love TDAX. You bought tons of TSYX today and T-Spot. Good. With the 50% pullback in crypto, maybe the 50% pullback will hold for at least a week or some bounce. I mean, it's 50% pullback, almost exactly where it hit. I mean, I'm looking at 6704 on the TV, and I mean, that's almost exactly. Now, of course, the Fibonacci level 61.8, maybe we'll go for that. Anyway, lots of times the 50 rallies. All right. Thank you guys for all your comments. All right, so let's do this. All right, put the disclaimer back up there. But old Bitwise, I mean, this is, this fund in the bull market went from 14 to 56, or just let's go from 24 from January 1st, 2024. All right, well, I can't tell, 24 or something. So it went from 24 to a high of 54. So let's see if it caught all the upside. You guys, I mean, we talked about this one. So what they do is they use a moving average or something. Whenever crypto drops under the moving average, they reallocate to bonds, or they have some technical trigger. I forget exactly what it is, but so, and let's put this down here and see how they've been doing. Or how about this? Oh no, that's not what I wanted. That is not at all what I wanted. I wanted to do it like this. Okay, so we have this demo's going sideways on me. I've got to get a multi-touch soon. Whatever. Let's just go look at the divas. But yeah, that is a bloodbath. I guess we can measure the 61.8 since I was just talking about it. So I can always say I never know where to run this off of, because I mean you could go back a lot further than that. So much subjectivity in technical analysis, but it is what it is. We'll deal with it. So let's look at this fib retracement. I guess we'll go off this the low at the last swing low at 15,000. Be a pretty good place to go off of. Oh shoot, I've got this jacked up. All right. All right, it looks like the high on this is 126. So it's that's not quite at the 50%. I thought I saw 130 print. All right, well, half of 126 was at 63. So all right, so the 61.8 is at 58. It looks like, right? Is that the 61.8? I can't. Yeah. 58 grand. That's the ultimate dip buy, I guess. That is the ultimate dip buy. Okay, so Tiger said he learned his lesson with the ULTY and YMAX. Never go the stock selection route, just stay indexed. I like that idea. Stock selection funds drop too heavily. Well, they're also the ones that go up really heavily too. I mean, to be fair, they go up about 12. Look what blocks in the bull market. So yeah, I would agree with you. I'd say when the market's dropping, absolutely. But when the market's going up, if you pick the right one, I mean, that's the whole idea. It's the risk and reward equation. But yeah, they're a mess. And the other thing is, all the high yield funds are pretty much based on software or AI. Software and AI are having a pullback. If all the high yield funds, if this was a different universe, and all the high yield funds were based on Dow stocks, for whatever, if this was 1987, they would be based on Dow stocks or whatever, a different universe, but yeah, absolutely, Tiger. I'm glad you sound like you have it figured out. You like that TSYX and TDAX, and that's a good one too. So, all right, Kosti, are you a first-time commenter? If you are, I really appreciate you. All right, so let's look at the Qs. Now, this is a daily chart, of course, and that's just an ugly look. It's a good thing. I'm glad, because pretty much everyone in our Discord over the past month or two has been de-risking, or using the barbell approach, including me, and I've seen you guys talking in comments. So I really think our Discord as a whole probably not getting hurt too bad. Which is good because that wasn't the case in April. But this looks just like April. To me, the setup's there. I think everyone's recognized it, smelled it coming a mile away. I've been talking forever about one of them's wrong, and we found out it's the market. The market was wrong, not Bitcoin. I said either the market's too high or Bitcoin's too high. They both, or Bitcoin's too low. So I expected Bitcoin to rally back to all-time highs or the market to crater, which is in it. It hasn't really cratered yet, but it probably will. Anyway. All right. But I'm glad Tiger didn't get stuck in Alti. All right. Or any of them. Even more so WiMAX, because WiMAX is much more dangerous than Alti, in my opinion. So let's look at some other stuff. Let's look at let's look at some other stuff. Let's see here what's going on. I was going to see if that's true. And what I said may not be true, but Alti's actually pretty safe in a bearish market. It just doesn't go up very fast. All right. Well, since inception on both of them, WiMAX is still doing much better, but WiMAX dropped from 13,000 to 11,500. That's a 1,500 drop. And yeah, Alti dropped 2,000. So Alti even dropped more than WiMAX. So in the last drop, WiMAX dropped from 11,700 to 10. That's a 1,700. Alti dropped from 10,500 to 85. So that's 2,000. Yeah. So Alti's outperforming both directions. Or no, Alti's only outperforming downways. WiMAX is outperforming the upward direction. All right. Yeah, WiMAX is looking, Alti is making Alti look good. All right. Yeah, I started watching to hear about Diva. Okay, I'm sorry. If I always get sidetracked, just put in the I'll talk about whatever you guys put in the comments. You guys will probably figure that out. So I appreciate that. I know you probably got to get out of here. Let's go talk about K-Yield real quick. Let's go talk about K-Yield. So well, let's talk about the Divas. I started updating this again. For a while, it wasn't up. We missed it for a day, but I did it yesterday. I did it today and the day before, and we're updated. Okay, here's the bad news about the Divas: is the blocks passed Alti this morning, but now ULTI has passed blocks again, down in a bad way, going down. All right. Then next we have LFGY down 28%, and then next we have WPay down 22%. WPay is making ULTY look good also right now, or whatever. A little bit. But K-Yield's down 16. K-Yield was not over leveraged. K-Yield made an allocation, and just like I was too heavy in blocks, and I've said it, and I've said I didn't see it, whatever. Howard was too heavy in hindsight. He didn't know at the time. He just said gold and silver, and he made a bet on gold and silver, and that has not paid off, or it hasn't been paying off recently. So, but if you still want to look out of all these funds, it's still the best one. Let's see how QLDY is holding up. QLDY is down 7, but heck, the Nasdaq's down 5. That may be the best fund out there. If you just want to track, I don't really mean that, but I'm saying it merits consideration. That's it passed. It was ahead of the Nasdaq a few days back here when the market bounced off the lows. It passed right. Now it never got ahead of the Nasdaq. Nasdaq was down 23 bips, and this was down 40 bips. That was the closest it ever got. But we haven't had an extended run. This came out at the worst possible time, or I started tracking QLDY at the worst possible time. I know the question is about K-Yield. What are you gonna do? The whole market's dropping. What do you think about K-Yield, Coastie? Are you a West Coastie or an East Coastie? I'm just wondering. What does everyone else think about K-Yield? Do we have any K-Yield holders in here? My investment philosophy is to look for the option strategies and the managers. I like Howard. I like the option strategy. Blocks, I like David. I like the option strategy. So maybe I have bad judgment or whatever, but I think a lot of you guys like Howard and David also. I think that's, but no matter how good Howard and David are, if they're running a growth fund and we're in a year where value takes over, but they work at let's say they don't own their own company where they can do it, but they own a firm that, this guy manages this ETF. Well, he's, this guy's, go handle the growth. You got the growth. And then it's a year where value takes off. This guy's going to underperform. Is he a bad manager? I don't know. I mean, I don't, not necessarily. But anyway, on K yield, I mean, I'm trying to think. It's my biggest position. I'm not worried about it at all, but I have a lot of hedges on, and I don't need the money right now. And and I don't even need the income right now. So the dripping at lower prices, as long as I think K yield will recover. Like I say, my bigger thesis is trust in Howard and trust in the strategy itself. So yeah, I'll just stay hedged and hang on to K yield. And remember what happened in April. Whenever we went way lower and then turned around and went up, i.e. after distribution day, actually I put more risk on. So if we could get a good 20% pullback or something, I'll take off my 20% ATTR, take half of it off, cash in some salty maybe, or definitely cash salty in. And that'll free up about 25% to put back into risk. And I'll probably buy blocks, or I might buy blocks. I might buy whatever. They'll probably be whatever the hottest fund out there at that time is. It'd probably be smart just to put it all in QLDY. I'm a little bit worried that QLDY doesn't have the upside blocks does. I mean, that's why I hedged when I said it may not be the greatest fund out there, but I don't know of another fund that even SPY I don't think matches the index like that. I'm not saying that to disparage SPY I. I'm saying we all, I'm saying that because that's impressive, I think. But we'll see if that's right. Let's go look. Let's go look. And we'll go back to October 31st. But what do you guys have any opinion about K yield? I guess maybe Coasty's gone. But just because I'm saying I have faith in Howard or whatever, like I say, I don't need the money. It's not a big deal. If you're in your situation where you need the money, I mean, you might have a different, or you need the money sooner. I mean, I'll start taking yield off this in the future sometime. Anyway, all right. So let's look at SPY I and let's look at QLDY. Yeah, so it looks like I was wrong again. QLDY is not holding up as well as SPY I. Now this is NAV. Okay, here's the deal. I'm sorry. I mean, it's still not. We need to compare it to triple QI because the SPYs are only better than the Qs. Still not going to be triple. I mean, I'm not trying to say I was right, but this will be a fairer comparison. Yeah, okay. I was going to say it's not that big of a difference. So the funded tracks in real life, let's look at triple QI. So in real life, based on the same starting date, let's look at this. Based on the same starting date, triple QI and QLDY. So what I wanted to compare, well, I was just going to compare it to how far. It looks like it's pretty close. It looks like QLDY is actually closer than the triple QI is right now. So triple QI, well, let's do it to the Qs. Triple QI to the Qs is what I really want to look at. I want to measure the relation. Okay, yeah, that's the relationship I want. Triple QI is underperforming or is actually outperforming the Qs by 2 basis points. Okay, over the same time frame that QLDY. Over the same time frame, QLDY is only missing by 0.5 point. So it's about the 2.5 point difference. But it's nothing like that first chart. Look at SPY. SPY is really holding it better because of the old world, because it's the value thing. So, all right. So Tigers, Coasty, okay, he's helping out Coasty. You trim today, hard lesson learned, stock picking, weekly payers, huge risk or IB is harvested, speculative stocks. Yeah, works great on the way up, bad on the way down. I agree. Thanks. Okay. Bayou Coasty. All right. Heck yeah. I love my Southern boys or Southern girls. I didn't mean like that, but I like Southerners. I like my Southerners. I like Southern music. I like Southern cooking. I like, I'm all about it, man. I'm all about it. And we got a bunch of good Southerners on here. Now, unfortunately, we got one Yankee in the house, but he's pretty good at stock picking. His name's Marcus, so we're gonna stick. We're gonna let him hang out here because he's a good Yankee. And then we got Mark. He's not here right now. He's in Virginia. He's kind of one of those guys that's kind of we aren't sure about him yet. We aren't sure about him, but other than that, we got BR, SB, and a lot of good Southern guys and gals. All right, guys. All right. So what else do we want to look at? Let's look at stock tools and see what else is. Let's take a look at something else. Let's see, stock tools is in the. Trying to think which account stock tools is in. Let's see. All right. I know you guys can't see that. At least I know that. Now I'll remember to share it. I'm so glad I finally started to remember to share the darn screen. All right. Or at least it's been a while since I forgot. Let's just put it that way. All right. Now I'm going to hope you can see that. And I need to check and see if you can. Yes, it looks like you can. All right. Maybe this isn't. Oh, I think I'm in a different account. Yeah, gosh darn it. Here it is. Here it is. Looks like the Qs are bouncing. I mean, but of course, when you sell out, I'm looking at a 1 minute chart. So, sign in. Gosh darn it. I think I am in that other. It is in that other one. I never thought I'd say this. There's really stuff about the Mac I don't like as much as Windows. It didn't used to be that way. They're multi-window managements. I guess the thing is, if you don't have a touchpad, Macs are. I used to love them, but I'm not loving the multi-window or the multi. It's just Windows has a better solution for this stuff I'm going through right now. This is ridiculous. So it's in Macs. All right. StockTools.max. Okay, yeah, there it is. There it is. Gosh darn it. All right. So this is a nice tool, StockTools.max. If you want to try it out, free for a month. I have a affiliate code. All right. So let's look at income ETF analysis, and let's just see how bad it is. So we'll just line everything up on a 1 day basis. All right, we select it all. We'll line it up on a. I wonder how Moderna's doing. Marnie was doing so well last week. I mean, it's probably down. It's probably still doing better than some of them. All right. Okay, what are you guys talking about? So Tiger Trimmed, hard lesson learned. If you do need income, WTD. Wow, I haven't heard anyone talk about that one in a long time. But anyway, sticks, TDAX, SD2I, XTT. Yeah, definitely. Yeah, the index idea. What about? I mean, I would throw SPY and triple QI in there too. Did you just see triple QI's spanking at QLDY, which is also a pretty good fund? So yeah, but I think you want to throw the Neos in with that too. But absolutely. You're happy just to hear about it buying the dip, but my index are bigger portions. All right. Now that we have high yield SPY funds, I'm inclined to agree. Let's see what Marcus. I'm taking Marcus out of content. Marcus is actually saying in this market, there's nothing income fund managers can do. Except, and God bless Jay Pestruccelli. I mean, he's the only one that's thought of this. Everyone hates Yield Max, wants to put them all in jail or whatever. Why haven't the other ones come out with an inverse fund? That Y triple Q is handy as heck. And if you need a yield or you like plain yield, you know, that Y triple Q is a good solution. I don't think anyone else, I mean, other than Tuttle coming out with the no risk, but I don't really think that's an income fund. But that's not the only way to do it. But you could then also Neos came out with SPY H, triple QH. Then a lot of people the past 6 months have been coming out with barriers, and so I think the managers are seeing this coming. But there's nothing. I would agree. There's nothing they can do on a bullish allocation. You know, they're running a software and crypto, you know, high yield fund like FEP. I bet FEPI's getting killed. Now it's not going to be getting killed as much as the other ones just because it didn't go up as fast because he uses monthly options, but I bet it's getting killed. Okay, it is what it is. You keep your allocation tame and buy defense value too. I mean, I actually did all right, and I actually did well in April. I mean, so hopefully I'll do well again this time. I saw April coming from a mile away, though, and I didn't double down in blocks into the sell-off. So, yeah. Anyway, all right. But yeah, those are some good index ones. And Tiger's saying here, skeptic. Yeah, yield between 20 and 30. Absolutely. Or even if you have less appetite for risk than that, you could do the yield between 20 and 16. And that's, you know, the TDAC, T-SPY, you know, area. But then, yeah, the 20 to 30 area, then you get into the SDTY, XDTE, QDTE. I think sticks and TDAX might get into the low 20s, right? With the yeah, probably. Heck yeah. All right. Well, it sounds like we're in good shape, and I'm proud of you guys for seeing this. You guys have been all over this. A lot of you guys have been getting barrier funds and have been de-risking also. Although I bet I've said the word de-risk probably 4 times a day since late October. So, I mean, hopefully I put the idea in your head, but I'm better at telling people what to do than doing it myself. I talk about de-risk and then I add risk. So, I mean, I added risk in blocks. Oh, well, I cut risk in every other area. The only thing I'm really beating myself up about is adding risk in blocks. I cut everything else, you know, every time I got a chance, I cut Alt-E. I cut everything else, but I just didn't, I didn't see the blocks. All right. Well, what you gonna do, right? All right. Yeah. Great day for winter, of course, was already talked about in the comment. Is MTTY some kind of inverse Misty, or is Misty just, is Mr. just bouncing for some reason? Surely it's not bouncing. Mr.'s not bouncing. I wonder if Michael Saylor's all right. Or not even Michael Saylor. Think about, there's, you guys remember about a year ago, there's people that would come into Discord and say, you know, or wherever. I mean, not our Discord. I'm not picking. I mean, get on the comment section everywhere and just go crazy and say, if you don't have Bitcoin, you're dumb, you're stupid, you're gonna, you know, you're have fun staying poor, or whatever. So with that, but whatever. No, Bitcoin has done well, but I'm saying I hope those guys that were thinking that also realize that a good investment can also drop. I mean, you know, the U.S. market was a good investment, but not in, you know, not in from 2001 to 2003, not from 2008 to 2009. Crypto was a good investment in 2016 and 17, not so much in 18. Great investment in 20 and 21, not so much. You know, it goes through its, you know, it goes through its cycles also. I mean, some of these crypto guys, it's like they've never seen something drop before. Snowing in here, none of you guys. I mean, but because you guys are traders. But you know what I mean? That you just, anyway, and I hope those guys, I hope they aren't on margin. And I hope they're all right. I hope they're all right. All right. So here we go. Winter, MTTY. I don't know what that is. Probably inverse. MicroStrategy. Then we have Fiat, PLYY. It's got to be inverse Palantir, right? Or is it? Gosh darn it. I should know. I mean, oh, yeah, of course. Palantir's price is there. That Palantir's down 7. The inverse is up 4. I don't know why Rob doesn't make this number negative when it's an inverse. Because Mr.'s actually down 12. So your underlying for this strategy is plus 12.26. You're catching 8.48. It means you caught 75% of the upside on the downside. You're catching upside on the way down. You guys get it? AVGW is actually one that's up. Okay, Broadcom is up. Wow. Maybe it's probably just so sold off. Netflix is bouncing. And of course, the W fund is leading on the way up because of leverage. Of course, leads on the way up, leads on the way down. Then we have NFLP. That's just an all-around stable one. Then we have InFly. We have some crashes only down. I mean, Crash is only catching a little bit of Tesla's downside, about a third, a little bit less than a third. TLTI, maybe a flight to safety. Maybe people are buying the 20-year. Triple QH, I just talked about that. Well, that's a good use case right there. It's actually up on a day when the NASDAQ is down 1.6. That's a good use case. That's a hedged equity fund. we've also been, that's the other, I feel guilty, but I guess I have been pretty much every piece of content I made lately has been about hedging. Or remember I made that content, how to prepare for the coming hedge or the coming bear market. And I looked at, trying to think, what did I look at? I think I looked at buffer funds there and stuff. Speaking of how to prepare for the coming bear market, let's look at Matthews and my ideas for hedges. Obviously, they're working out because the market's going down. Matthew's been all over this. I bet that's the reason he was putting these hedge things in there on Monday and Tuesday and Wednesday. Today, he didn't talk about hedges. Today, Matthew's thing was talking about a UFO disclosure. Now, he could be talking his book because Matthew also has a UFO disclosure ETF, right? So, but that's the new, that's what he didn't have any more hedging ideas today. But man, his hedging ideas were right on time. Tuttle 3-leg hedge is up $300. I mean, somebody, it's because I watched too much Tasty Trade, and Tasty Trade taught me to always take credit. Or not only Tasty Trade, Peter Resnicek from Shadow Trader. A lot of option traders try to always trade for credit, even if they're trading directionally. And that's why I like my 3-leg, where the flat spot gives you a little bit of income. What Matthews, but also what the problem with that trade is when you make a flat spot give you a little bit of income, you have to put further out of the money to make that happen, and then you don't have as much tail risk. It still gives you some tail risk, but the market has to drop further before it kicks in. Anyway, so this is strategy, and this is what I love about. It's my favorite thing about this job. I mean, you two, I like meeting you guys, but I'm really in this to try to pick up what these guys are doing with options. I mean, that's my favorite thing about talking to these managers is that I can text them, or not text. I don't text any of them, but I can email them. And I emailed Jay occasionally, and you can email them when you have an option strategy question or whatever. So speaking of that, speaking of option strategy, guys, Mike Coe is going to be on the show. I think on the 12th. I need to send him a invite today. But I believe it's on the 12th. I'll make a thumbnail and put that invite up there. But anyway, yeah, this hedge, even though Matthew does it as a debit trade, it could be it obviously can work on the way down. And this isn't just a trade by itself. Matthew does this to hedge a position of like, here, I thought this was interesting. I was messing with last night. Matthew does this as an overlay. He recommends these 3-leg trades as an overlay, meaning to use this on top of an allocation of Qs. So the question is, how much Qs? Well, one way, this is a 1-lot option trade. There's 3 options, but they're 1 contract apiece. So this could definitely hedge 100 shares of Q. So we can see what that looks like. We can see what this is really doing for you. So let's just add Qs into the equation. All right. So we added Qs into the equation, but it's showing it as a locked-in profit because this has dropped so much. But that could be the way. I mean, yeah, that's the way overlays work. If the Qs would have kept going up in a big enough up move, Matthew, this fund loses money on an up move. It doesn't really matter because it's made to go against a long portfolio. All right. And if you have a black swan event, it's not like this strategy makes you make money because it's an overlay. It stops the bleeding. It removes the risk. I just wanted to emphasize these are overlay strategy. Now, here's another way to be a little bit more aggressive with the overlay strategy. You can vary what your long is and what your short is. So or what your protection is. The protection is a 1-lot trade. It's three contract. It's 1 contract, and even though it's 3 different options, okay, 1-lot trade. So wonder if we use that to protect like 200 shares, instead of 100. See what that would do. Okay, so if we used it on an overlay for 200 shares, you still preserve your upside. And in a bad market, if the market's down 5, okay, watch this. We'll do percent of max profit or loss. Market's down 5. Okay, that C at the top number. I know I'm pointing to stuff. Okay, see that number right there. Anyway, right? I don't know how to do this. Market's down 5. You're only down 1.9. Market's down 10. But this is the idea of an over. And just in case people dinner. I don't think Matthew's recommending to do these as a trade just by themselves, even though they're working out well. He will do this. I get the idea with every day when he's worried about the market, put one of these on every day. But I think that's kind of I don't know about the every. I mean, every day's all right. So I went out and I did one yesterday for Friday just to see if the same strategy would work out. And so here's the same idea going out for a week. Wasn't done for it cost $150. There was no take your wife to dinner. You can't take your wife to dinner at this strategy. It's not an income strategy. And like I said, that's the thing I picked up from Matthew that I mean, I was doing, I don't know. Anyway, I love this kind of stuff. I hope you guys do too. But that's the same trade right there. So, but back to the protection. Let's say this was, well, here's the other thing. Okay, let's add in 100 shares. But of course, you aren't going to buy the Qs today. Let's say you own the Qs from 500, right? Hang on, because this is protecting us. That is protecting a profitable position. So you've had the Qs for a while. Let's say you had them at 550 or whatever. Okay. So it's just locking in you're locking in your profit, but you still have upside. That's what this 3-leg trade is doing. And if you underhedge a little bit, a lot of people say it's good to underhedge. You still get something like this once the market's already moved, because if we move, you have 48 points of you've captured 48 points of upside of the market's upside. So you have, so there it is. There it is. And even though this is long 200 shares, you do lose some money in a down move. It takes you a while to, it still protects you. So that's the whole idea behind Matthews. I'm not going to make a video on that, but I'll just do that right now. So that was the video on Matthews. If anyone's interesting, or on the hedging strategies, let's see how we'd see how my ideas are doing too. Oh, I did a take your wife for dinner for comparison. Here's exactly what I'm talking about. So the take your wife for dinner is only up 169. Where the total 3-leg, and the difference is because I demanded to have a credit, because that's what Tom Sosnoff and Tasty Traders say. I'll try to always get a credit. It makes the trade better, and I agree with it. I think that credits are a good thing, but for when you're trying to get tail risk, maybe not. Yeah, sure, you could take your wife to dinner on $39. You could have taken her to Chipotle. Yeah, you could do Chipotle on $29, or $39. But who cares? Just don't eat Chipotle, and just use Matthew's strategy. Like I say, I get the theory on Matthew's strategy, because the only difference is, watch this. I'm going to move the put. See, right here's Matthew's strategy. I'm just going to pay $200 for the position, and here's my strategy. So. All right. What else do we want to look at? Oh, I guess we could go back to, we got Charles in the house. All right. Charles is in the house. Yeah, don't fall for income traps. Bitcoin is getting hammered today. I know it. I don't know what I'm more worried about, Bitcoin, or let's go look at silver again. I don't know what I'm more worried about. We'll check out silver futures. Yeah, been a good time to line up into that rally, but oh well. Oh, well, let's see if I'm still up in K-Silv. After today, I may not be. All right, it's at 36. Yeah, I'm still up because I'm in K-Silv at 28 or 25.80 or 28.50, something with 8s, 5s, and 2s. And it's not 58.20. It's like 28, or I think it's 25.80. So, and I got it down here. So, yeah. So, oh, well, but now my gold on K Gold, I'm underwater because I didn't buy it at the same time, or for some reason I bought one of them at a different time, and I checked my K Gold fill, and it's not looking great. Maybe, yeah, I got K Gold into this rally as well. I paid like in the 30s for it, and this is dividends reinvest. Let me show you. I got K Gold like right, yeah, 30 something into this. Anyway, so it took me a while to get back above. And last time I checked, I was back about almost to break even. It looks like I'm a little bit ahead of break even. All right, well, whatever. Who cares? Who cares? Okay, let's go to Bitcoin. All right, Bitcoin's trying to bounce on the 30-minute chart. But yeah, that is ugly. Oh, well, like I say, you guys were mostly hedged or bought a bunch of CAIE. So we can thank Marcus for that, or CAIQ or SBAR. I mean, a lot of you guys have SBAR. That was a good call. Great job, guys. You think today's the end of the short-term sell-off? Yeah. Hopefully we get a bounce. We're just I mean, usually after a falling, they say not to catch a falling knife forever, but usually after the knife falls, sometimes the knife, goes back the other way too. But I'd say this. But I think if a person is bearish, yeah, don't on a trade, maybe definitely wait for a rally. That's the way go. That's my opinion. Try not to sell the lows. Try to wait for a rally to get rejected and then to lose momentum. I like to draw the a bear wedge. You can usually make a. We do it all the time. It's just not on this chart. I mean, this is the bear wedged in. All bear wedges right here. This one, and this is just, well, yeah, this one right here. Higher low, higher low, higher low, higher low. Again, that nice 45-degree upline. When that breaks and then you get a retest, it didn't really all the way retest, but then, it's ugly. It's ugly. All right, guys, I'll let you guys get out of here and go trade the market. I have to figure out what to do with my puts. And I need to go send Mike Coe, and I need to go send those guys that invite. But that'll be on the 12th. And then I also have a pre-recorded show. Maybe I'll pre-record Mike Coe also for a change of pace. But anyway, I have a pre-recorded show with David from Quantify. But we haven't set a date yet, but I think it might be pretty soon. So I'll keep you guys up to date on that. But I'm glad Charles is saying it's the end of the short-term sell-off. I would like to see that. All right, guys, thank you so much. I hope you have a good day. Remember, not financial advice. Check with the financial planner for all your financial planning advice. If you'd like to support the station, you can do so at paypal.me/maxconvexity. And don't forget to like and subscribe. All right, guys, thank you so much. I will talk to you guys later.